Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in insane markets and giving you great levels to trade off of to make pips. Hope you've been following the daily analysis. But in this video, we're going to be talking about the proverbial make millions of dollars trading. And we're going to break it down to the ridiculously simple. But it has to be said that in order for you to make serious coin trading, you got to have a positive expectancy system. Now, that means that you have to have the ability that has, whereas you have probability of winning. Now, we could go over the win-loss ratio, but that's really just historical analysis is what your system did. Okay, but really the key to making tremendous amount of money trading is what everybody considers to be really boring, which is money management. And money management is not boring. As a matter of fact, I'm going to give you a link in the video. We're going to play a game, or I'm going to ask you to play a game, okay? And it's going to be a coin flip game. And we're going to explain the rules of the game. So we're going to take these videos step by step, one step at a time, so that you can, I'm going to lead you to a money management system that is going to be, that you can use, that actually can help you achieve exponential growth. Now, if you want to make $1 million in a month, well, you can do it as long as you have the proper account size to do it. So in order to make $1 million in a month, you're going to have to be trading something like maybe 100,000, 150,000. You could do it. Okay. But remember, the more money we're trying to make, the more risk we're putting out there. You know, we have what, unfortunately, we could get a string of losses that could really punch us in the face and knock our account value down. I'm not saying it can't be done, and you're going to be able to see it in the coin flip game that we're going to play. Okay, so let's break this down to the ridiculously simple, okay? Let's start with, a person with a small account, let's say $10,000, and we want to make $100,000 over 5 years. Oh my God, 5 years to make that kind of money. Well, if I told you that if you started with $10,000 and you managed the money properly, in 5 years you'd have 100,000, would you scoff at it? No, you'd say, well, that's a pretty damn good rate of return, pretty damn good, 10 times my money. Now, of course, we're using a scenario where we could just break things down to the ridiculously simple so you can understand the principle behind what I'm trying to get to, okay? So if we want total profit of $100,000 over 5 years, simple math would say we need to make $20,000 per year for 5 years right here, right? We need that amount of money right there, $20,000 a year for 5 years. That would mean that we need to make about $1,667 a month for 60 months or 5 years. Weekly profit would be $384 a week for 260 weeks for 5 years. And of course, we're talking about a daily profit of $75 a day for 1,320 trading days, approximately 5 years. So now you're saying, oh, wow. Okay, so $75 a day on average, okay? Now, because we have to have days that we have losses, right? So that means we need to contain our losses so that we come up with an average of $75 a day. So if I'm saying we need to make this kind of money trading foreign exchange, now you can extrapolate it using anything else, cryptocurrencies, commodities, stocks, okay? What it comes down to is about 25 pips a trade per half a lot. So 50,000 traded, you need to make about 25 pips a day doing that. Now, okay, you can make 12.5 in one and then 12.5 or 30 pips in the other, then take a loss on one, as long as you are basically coming up with a method where you're locking in profits and you're cutting losses. So there's the proverbial let your profits run, cut losses short. Okay, so one of the things that I always do with my trades is like I always generally risk about 50 pips in order to try to make 100 or more. Now, a marketplace doesn't always give you that for the day. So, for example, I'll give you an example. I traded sterling yen the other day for fabulous mood just on Friday alone. Okay, it went down over 180 points on the on Friday. Okay, so I entered short. Okay, at 191.11. My stop was 191.55 ish. Okay, marketplace started moving in my favor, and it really never went against me. So I just kept ratcheting my stop down. I took, okay, a third of my position off at 190. Wait a second, was 190. Hang on, I got to look up my sheet because, sorry, it was 192.11, and I bought back half. I bought back 1/3 of my position at 191.39, and I squared my position at 190.99. Okay, the whole thing. But I was moving my stop down as I was in the money, because I'm trying to basically follow my money management, where I'm not trying to follow, I'm following my money management so that I can lock in profits. And that's the most important thing. Now, if the trade would have went against me, boom, I would have been blown out. Okay, so I made a reward calculation on what I was going to risk for that day, and based off of my 50-point risk. Okay, now as you start to learn your system, we're going to be talking about, hopefully if you're interested, please put in comments you're interested in systems. I'll go over systems that basically, that I developed at Casa Spremio Torino, that help me advance my account now, and basically gave me parameters to trade between. That's another important factor. If you have a trading system, it's telling you where you're wrong. Now, don't ever second guess it. Look, it happens. And I think the coin flip game is going to be a really cool game to play, so you could start to observe your own psychology. All right? Because even as I was playing the game, as the coin flips were going against me, I was getting like, oh man, you start thinking, okay, when's the next, head's going to occur? You don't know. You just don't know. And it's the same thing with trading, because trading runs in streaks. And that's what the money management's there to do for you. So we're going to get into the game right now. We just wanted to give you that little, break it down to simplicity. Like, you want to make 100 grand, and you could do it over 5 years. Well, you need 20,000 a year for 5 years. You need 5,000 per market per year for the next. If you're trading more than one market, you could break that down. It's $460 a market per month for the next 60 months, 5 years, $96 per market per week. Now, so that means if you're trading sterling yen, euro dollar, euro yen, and you're breaking it down, you just break it down. So it's ridiculously simple that, what we say is we just need $75 a day for 1,320 days on average, because you're not going to have every day where you can get $75. But if you're looking for $75, you have to start figuring out mathematically, what can I risk for the days that the marketplace gives me more than 75? Like, you can get 200 in a day, or 300 in a day. So those days are going to pad your P&L for you. They're going to help you move along. Now, we're talking about making $1 million, right? So we're going to go one step at a time. This is video one. I'll do another one. And I find it to be quite interesting, and hopefully you do too. So let's get ready to play the coin game. So here's the coin game, all right? And I think it's really cool. And I wrote some notes here. You're starting off with $100. And you got 4 options on how you can bet on each coin flip. Now, you could play all 4. It's a bit time consuming. But what I suggest you do is bet B, 25% of the total account value. Why? Because I know that one gives out the best return for your money. Okay. So on bet A, you're betting 10% of your total account on a flip. If you win, so if a heads turns up on the coin, you win 2 times the amount that you bet. So in trading, this is, I'm risking 50 pips to get 100 pips. Okay. Or I'm risking 25 pips to get 50 pips. Or I'm risking 10 pips to get 20 pips. Okay. It's all relative, however you want to look at it. So when you win, you receive 20. You win $2 for every dollar that you bet. This is a great positive expectancy. It's 50-50 for the coin toss, but you are winning twice the amount of what you bet. That's fantastic. In trading, we don't get that. We could get sometimes better, but sometimes you don't. I mean, whatever the marketplace is going to do. So if you win, all right, your new account balance is basically $120. Then you bet 10% of the 120 on the next coin flip. So that's going to be $12. And you continue the process until, you do your 100 or you're blown out or whatever. Now, here's bet 2, 25% of the total account balance. So you start with 100, you bet $25. When you win, you receive 50. Your new account balance becomes, 150. I don't know why it says new account balance 125. I'm sorry. Yeah, sorry. You start with 100, you bet $25, you win 50. So your new account balance becomes 125. Why does that say 125? 25%, $25. You win 50. Your new account balance is 150. That should be. So the next time you bet, you should be betting, let's see, 150. I don't know why my math is wrong. 150 times 0.25, 3750. Okay, so that's 25% of 150. And you just keep repeating until you adjust this. Okay, so on the next one, you're betting 40%. So you're betting $40. If you win, you receive 80. Your new account balance becomes 180, and then you'd bet 40% of that of the 180, which is $72, and you just keep adjusting. So why this did this to me, I don't know. I have to fix it later. But anyway, you get the point. So all we're doing here now, I'm going to give you in the description a virtual coin flip. I didn't really want to sit flipping coins, trying to chase them all over my desk when they fell off. So I basically found a virtual coin flip, and I used the virtual coin flip, and I did it. Now, what I'd like you to do is pick one and tell me in the comments, what did you receive? Did you make money? Did you lose money? What one did you find out to be the best? I look forward to seeing you in the next video on money management, how to make $1 million trading. Cheers.